You're listening to Southeast Radio's Business Matters with Karl Fitzpatrick in association with Wexford Insurances. Challenge us at Wexford Insurances 0818 31 30 30.
My first guest this morning is Adrian Madden from Close Brothers Commercial Finance, who dropped by to discuss a creative option for business owners to release cash into their business. Adrian, you might start by telling me a bit about your own background, please.
I'm originally from Cork, and in 1988 I would have left the shores, as many of us did back then, and went to London and started in the banking sector. I worked my way as a graduate trainee through a Japanese bank in the city, and then after about 10 years there, progressed into an American bank and spent 12 very enjoyable years there. I suppose like a lot of people, I met a girl from the West and came home to Dublin and worked for the RBS Group, which most of your listeners will know, Ulster Bank. It's an Ulster Bank Group company. So things went very well for me. I worked there for about a decade, and I decided to leave there with a voluntary severance package about 2 years ago, and I met Close shortly after that.
Most of our listeners won't be familiar with the name Close Brothers. Tell me a bit about them, please.
Close Brothers would be a UK merchant bank. It's a FTSE 250 business, quoted on the London Stock Exchange. Assets of about 6 billion and with a staff of about 2,500 people. And in Ireland, we opened a Belfast office in 2006. Invoice finance went very well. We brought the asset finance product then into Belfast in 2010. In 2007, we would have brought the invoice finance package into Dublin and across the country. And then asset finance, which is the part I'm responsible for, opened about 9 months ago. We're trading now. And we closed off our financial year just the other day, 31st of July, and I'm very happy with the numbers.
And what's Close Brothers' outlook for the Irish market for the coming years?
Well, we see a great fit for the business in terms of how we can bring more and more products into the country. At the moment, we're doing hire purchase and leasing for asset finance. I mentioned already the invoice finance piece. We're recruiting across the country. We have a new person starting in the west of Ireland for us. I'm just about to appoint somebody in Munster. I have somebody in our office supporting us in the back office starting in a couple of weeks' time. And indeed, I'm looking still to recruit people in South Dublin region shortly.
That's certainly very encouraging in the banking sector, especially today. I know that it's the asset finance division that you're over. Tell me and explain to me what exactly is meant by the term asset finance.
Every SME, Karl, or small or large corporate will want to buy assets that hopefully that are income generating. And those assets will be funded predominantly through a product called hire purchase, leasing, or indeed contract hire. So a piece of plant, for example, a truck driver will want to buy a truck. Most trucks cost any region from 60 to 70,000 euro. He'll want to fund that over a period of 4 or 5 years where he can maintain his cash flow. And that truck, at the end of its 5-year term, will still have an inherent value in the asset. So, for example, a lot of companies don't know that they have many, many types of assets in their business that are free of finance. Close love the fact that we can identify those assets. If it's 4, 5, 6, 7 years old, we'll fund it. We'll place a value on it and we'll refinance their companies. And that value of that, they can put it back into their cash flow or they can use it to reinvest in other new equipment.
Is this a new concept? Because I know that over the years, second-hand cars, for instance, have been financed by finance companies out there. But it's the first time that I've heard that assets can be refinanced, let's say plant or machinery or even particular equipment can be refinanced even though they may be 4, 5, 6, 7 years old.
It's not a new concept as such. It's just the banks, traditional banks, don't like doing it. Close's model in the UK, and now that we've brought that model over here, we like it. We understand asset values. We have in-house expertise where we can value assets, whether it's in the printing sector, the agricultural sector, indeed whether it's in transport or in plant and machinery. What we'll do is, if we don't understand the equipment, we'll bring in an outside valuer independently and who can value and place an inherent price on it, and we'll finance it then.
Typically, what percentage of finance would be available based on its current market value?
We'd always like a 15% stake into the deal. So 85% loan to value would be our preferred route. But there are many businesses who want to put down bigger deposits. But I have funded 100% finance of products before For example, I had a transport company who funded some new trucks and new trailers with me recently, but I knew that 15% deposit was going to stretch their working capital. So I decided that it would be better if I gave them 100% finance, but I still needed some security as deposit. But he had a lot of trailers out in his yard. So we had a look at them and identified and valued some of those trailers. So I took those trailers that were free of finance, put a value on them, and we took it as additional security. And we paid out to suppliers 100% finance on the invoice price.
I know you've only been up and running 9 months at this stage in relation to asset finance in Ireland, but typically what type of equipment and assets have you financed to date?
Predominantly, we've targeted the transport sector, bus, coach, truck and trailer. We've done a lot of agricultural equipment, we've done some printing equipment, and we'll try and fund any type of manufacturing equipment. So it could be any type of machine on a shop floor. But what we're really looking at is an asset that's durable. There's a good lifespan in it. And a lot of those assets I mentioned to you, Karl, would have a lifespan of anywhere from 7, 10, possibly 15, 20 years. What we're also looking for is there a saleability in that asset? If, for God forbid, that tangible asset had to be taken back, or the customer was unable to pay for it, we'd have to take it back. We know that there's a global market for that, and so we can resale it. Just like a second-hand car or truck, we know we can get rid of it. And then, of course, it has to be identifiable. We want to have be able to say, yeah, there's a chassis number on that, there's a registration number on it, or there's some type of plate on it where we know we can register it with hire purchase information, or HPI, as it's commonly, your listeners will commonly know it as. And then finally, Karl, we want the asset to be tangible, where we can go out, kick the tires in it, touch it, feel it, take a photograph of it, and know that there's an inherent lifespan in that asset.
So Adrian, for any business owner that would be listening to the show today that would have assets that would be unencumbered, what process would they have to go through in order to have those refinanced? We
can identify the asset, the customer will know what it is, we'll put a value on it. If we can't place a value in-house in it, we'll bring an independent third party in and place a value on it. We'll release 85% value in that asset back into the customer, and we'll fund it over a period of time, depending on the age of that asset.
And what level of documentation do you require from the client in order to put through an application?
We would have a preference to lend money to businesses that have been 2 years trading or more. So we'll want a set of audited accounts. We'll be looking at bank statements. And we'll want a copy of the invoice, the original invoice, or indeed if it's a new asset, we'll want the supplier to send us an invoice. And we'll look for tax clearance certificate. And we'll look also at the Irish Credit Bureau, where there's a credit history of repayments with other banks. So that effectively is how we'll assess an application, and we'll send it in to underwriters for credit assessment.
Adrian, does the ownership of the assets transfer to close for the lifespan of the contract itself?
It does, Karl. And what will happen is if it's a refinancing piece of equipment, the customer will raise an invoice on his own headed paper, and he'll pass good title to us that way. If it's a new piece of equipment, or indeed a customer is buying a second-hand used piece of equipment from a supplier, the supplier will be invoicing us as well, and they'll be passing title in that equipment to us through the invoice route. And that's the most effective way to ensure that we have ownership of that asset until the final repayment is made on the HP lease agreement.
Why would somebody leave an existing bank to put finance on a particular asset with another finance house? Why wouldn't it, even from a convenience perspective, keep everything under the one finance house? And in that respect, are you not going to find it difficult to build market share here?
It's a great question, Karl, but I don't think we'll have too much difficulty building market share here, for the very fact that what I've seen over the past 9 months and the portfolio that we've built and the traction that we're gaining in terms of pipeline that I can see coming down the track. What a lot of businesses did over the past 10 years is they kept all their eggs in the one basket. So they had all their borrowings from the same bank. What's happened over the past few years since the economy downturn is a lot of those banks are looking to reduce overdraft facilities, call in term loans, and really just try and whatever outstanding monies that they have out there, they want to get them back. There's less appetite to lend. Whereas Close are coming into the country and saying, we have a number of different products and we're happy to give those products and lend money against various assets. So that's where we see market share growing, where we can offer a new product or a new service to a SME or a corporate business. We have our own money to lend. And I think that being part of the Irish Credit Bureau, where there's a history of repayments, it'll help people's credit rating going forward as their loan continues to perform with Close.
And my final question to you, what does the future of Close Brothers Commercial Finance look like in Ireland?
Well, I mentioned to you that we're continuing to recruit in the market. So we want to build a client base, we want to build a loan portfolio that's robust and sustainable, and we want a viable business to grow over the next decade and beyond. And as a subsidiary of a UK PLC, what I could see is more products coming into the country. So at the moment we're doing invoice finance and asset finance, but as we build that portfolio and the sustainability there, we'll bring more products in and we'll lend to other businesses in other sectors with other products. That's where we see the future for Close, where we're open for business now, where we've a strong appetite to lend, and we're doing very, very well so far to date.
Well, Adrian, it's encouraging to hear that Close Brothers have entered the Irish market and are actively looking for new business. Many thanks for coming in this morning, and I wish you continued success in your role.
You're listening to Southeast Radio's Business Matters with Karl Fitzpatrick in association with Wexford Insurances. Think Wexford Insurances for your business insurance.